Hey everybody, Joshua Phillips here with Churchill Mortgage. I'm sending this out on behalf of myself and my wife, Amy. You may be getting this from her as well. Well, it is April the 18th and we are in Easter weekend. And let me just say first, before we start talking about mortgage rates, that a weekend like this, today being Good Friday, and then we're going to be celebrating Easter Sunday, is such a great reminder that there are things in life more important than interest rates, than home purchase prices, appreciation, all this sort of stuff. So I know for myself, sometimes I just need that little reminder that while these things are important and can make me feel stressed, they're not the most important things in life. And I hope that's true in your life as well. There are things that are more important than what we're going to talk about right now, which is what's happening with mortgage rates. Well, last week we sent out 2 weeks ago, we sent out a market update that said rates are at the best levels of the year. And then last Friday, we're sending out a market update that says rates are back near the highs of the year. And of course, the whole range, we're talking about, 0.5%, lows to highs. So, mortgage rates are not moving around, multiple percentage points. It's probably 0.5% from the low of this year to the high of and we've pinged around. So I usually like to start on CNBC and see what they have to say. I really didn't find a good article this week about mortgage rates. It really wasn't a sexy week for mortgage rates. So let's focus here on the 10-year Treasury note. I always tell you that that's something you can follow right on CNBC every day. We want the mortgage yield or the 10-year Treasury yields to go down. That's going to mean better interest rates. And of course, 2 weeks ago, we saw that fall to under 4%. And then last week shot up to 4.5%. Again, representing about a 0.5% increase in mortgage rates as well. And then this week, we kind of came down a little. Let's pull in here to maybe like a month. We kind of came down, saw some improvement. And then yesterday we saw things get worse. Oh, by the way, markets are closed today for Good Friday. So, things kind of ticked back up just a little bit on Thursday. Of course, all of this has to do with the tariff news. Now, let's move over here to mortgage-backed securities. Again, mortgage-backed securities are where mortgage rates most directly derive their value. Every mortgage professional in America probably has this screen up. We're keeping an eye on what's happening with mortgage-backed security prices. All you need to know is, as always, green is good, red is bad, and the higher the security price, the better mortgage rates are doing. And so this is a fairly easy chart to read. We saw, again, mortgage rates a couple weeks ago reaching the best levels we've had. You can see it right there. We kind of had these series of green candles helping things get better. Then the tariffs kind of, as they're really soaking in last week, boy, we just had a major drop. Again, mortgage rates probably jumped about 0.5% just last week as they kind of went back or near the highs of the year. And then, this week, boy, Monday, nice green candle, positive. Tuesday, green candle, positive. Wednesday, green candle, positive. And then Thursday, we saw mortgage-backed securities fall off a little bit. But we're better than we were a week ago. We're not as good as we were 2 weeks ago. We're kind of like the, the baby bear, whatever, just, I don't know, just right. Anyway, obviously we want to see security prices and more continue to go up and mortgage rates continue to decline. Now, just for a little technical analysis here, these are called moving averages, these lines. And, you can see we're kind of sitting there at this critical point now below some of these moving averages. That forms a ceiling of resistance. We want to see us break through that and have a support level. To be honest, it's been extremely difficult to really predict, as any of us would say, about the economy right now, what's happening the last couple of weeks. What's happening? I don't know which way mortgage rates are going to go next week. Again, we're better than we were a week ago, worse than we were 2 weeks ago. We're kind of sitting there right in the middle. I'll take the green candles as a positive. So, it looked like the sky was falling last week. So we've kind of at least stabilized, seen a little bit of improvement. Well, listen, if Amy and I can be of any assistance to you with the pre-approval, if you want to have a conversation about your home purchasing abilities and getting pre-approved, we're happy to do so. We're happy to work on a pre-approval for you. And, if you're looking to refinance, you're just you're just gonna have to keep waiting. It's been a long time coming, but we want to make sure that it makes financial sense. You don't want to pull the trigger too soon, and then see rates go down after that, and then you've kind of missed out on some gains. Plus, for most of you, it just doesn't make sense probably to refinance any of my clients really from the last 2-3 years. So let us know how we can help you. I hope you have a wonderful Easter weekend as we celebrate the resurrection of Jesus and you spend time with family. All right, take care. We'll be in touch next week. Bye.